So the focus this morning, as we've been telling you inside of the big story, is on the BOJ having recently cut interest rates. And we wanted to discuss this morning the impact that this will have on the economy and just on the common man. And so joining me is the CEO of Money Media Limited, Kalilah Reynolds, who is my guest at this time. Good morning, Ms. Reynolds. How are you today?
Hi, good morning, Richie. Good morning to your listeners.
Thank you so much for joining me on this very important matter. The BOJ having decreased its policy rate from 6.75% to 6.50% per annum, effective October 1, 2024. This change aims to promote economic growth and stability, they say. Additionally, we understand that the overnight standing liquidity facility, SLF rate, has been reduced from 9.75% to 9.50% per annum. Now, I want the average listener, Kalilah, to kind of get a better understanding of what these developments will mean to their daily lives. Interest rates going down by the BOJ. What impact is that going to have on us?
So the BOJ sets the tone for interest rates across the financial sector. And you all know how you're impacted by interest rates because when you go in to borrow a loan for a car, for a house, so you're getting a mortgage, you're borrowing a small business loan, you are just trying to get a regular unsecured loan to go on vacation. The interest rates are, what the bank charges is the cost of doing that business. And interest rates have been high for the past couple of years. Basically, since COVID, these interest rates have been going up and up and up, and that was because inflation was high. And so what the central bank does is they use interest rates as a way to try to control inflation. The working theory of the economists is that when inflation is high, they can use interest rates to try to control spending, to try to control demand. Because if people are less willing to borrow when interest rates are high, that is going to control how much spending takes place in the economy. So businesses will probably have less inventory. People will be using maybe their credit cards less, for example. And so that's going to control demand. And when demand comes down, then inflation can also come down. And we know inflation has been the number one issue among Jamaicans for the past couple of years. Cost of living just gone up. Things have gotten extremely expensive across the board. You look at your groceries every time you go to the supermarket. Prices have, in many instances, doubled in the past couple of years. And you look at what happened with school fees last year. They went up by about 40% in one lick. Rental prices have gone up a lot as well. And so what the BOJ has been trying to do these past couple of years by raising interest rates is trying to reduce demand for consumer items and therefore bring inflation down. Now, it has been working because last year we were at 10-11% inflation. And now we're back down to 6%, I believe. And it was even lower than that, but then we had burial. And we all know what burial did to inflation again because, the productive sector was hit very hard. Agriculture was hit very hard. You've been seeing these $1,000 for one tomato, $1,000 for one sweet pepper on the shelves. That's inflation. And so it did go back up to about 6%. So the central bank has this very delicate balancing act that it needs to do to try to, on the one hand, control inflation, but on the other hand, we also want to make borrowing accessible to the people who need it. Now, when it comes to the impact of the reduction of...
I'm hearing you, Kalilah, yes? Hello? Seems we... All right, looks like we lost Kalilah there. I'm going to have to do a quick redial so she can continue. I'm finding this very, very interesting. Not sure what happened, but let me do a quick redial and see if we can get her engaged once again in this segment. It's the big story, and we're ringing. Okay, Kalilah, are you there?
Yes, we lost the call earlier.
Yes. All right,
I
we're
think
back.
we were just talking about. You hearing me?
I'm hearing you now, loud and clear. Yes.
Okay, great. So I'm not sure at what point you lost me.
Right, but you were making the point about the basically what is the desirable rate for inflation is really where we're at. You said it's 6% is really the target. I believe the BOJ.
No, the target is 5%.
Okay, 4 to 6%.
We're at
I've read.
6.5%, I believe, right now. 6
Okay.
point something percent. So we're just outside the target, and that was because of the impact of Hurricane
Beryl, yes.
So it was. Everybody was speculating whether the central bank was going to reduce interest rates again, given that we're now outside the target, higher than the target, because of what happened with Beryl. But they did reduce interest rates yet again. So they did it a few weeks ago for the first time in 2 years, and now they've done it again despite the impact of Hurricane Beryl, which signals that there is confidence in the economy that inflation is going to come back to within that target range. Now, when it comes to the impact, we're not going to see interest rates that our financial institutions reduced tomorrow, unfortunately. There's always a lag between the time that the central bank makes its decision and the time that we see the commercial banks start bringing their interest rates down. In the past, it has taken as much as 18 months, 2 years before we start seeing that impact. Why? Is that fair? I don't think so. And had this big debate in the past as well, that central bank has been bringing down the rates, but commercial banks haven't been quick to respond because, if you recall, so we've been at 7% for the past 2 years, but we've been as low as 0.5%. That's the lowest central bank has ever raised their rates to, and it was at 0.5% for some time, which should have meant that interest rates from our commercial lenders should have been in the range of 3 to 4%, but that never happened. We never got rates lower than, say, 5%.
Right.
So the commercial banks have not traditionally lowered their rates in line with what the Bank of Jamaica has done. And I think it's time that they be called out about it. They have been in the past, but this is an opportune time to call them out again.
Yeah, I mean, we from this side would feel that they should be mandated to actually reduce. I can't see why to take them 18 months, for instance, to make an adjustment when the BOJ would have gone down by, in terms of their rate. It seems a little unfair to the private sector and to the public.
It absolutely is unfair.
Yeah. Now, is it expected that we will see some degree of economic growth with a minuscule reduction like the BOJ has implemented recently?
Well, there are other factors at play here as well. So what the BOJ does with interest rates doesn't only affect commercial lending. Interest goes the other way as well. So you have your borrowers and you have your lenders. The borrowers are the ones who pay interest. The lenders are the ones who earn interest. And when you think about lenders, you don't only have commercial lenders. You and I can be lenders. For example, when institutions issue corporate bonds, when the government issues treasury bills, which do move in line with what the central bank does, that is a way for us to lend the government money when the government issues treasury bills. And those are very popular among the moneyed class, but it's becoming more popular amongst the middle class as well because it's become more accessible over the past couple of years. They've reduced the minimum investment to $100,000, which I think probably you, Richie, you probably could save $100,000 and invest that in a government treasury bond. And so because it's accessible and because it moves in line with the BOJ interest rates, you can become a lender to the government.
Okay.
And so when you have the opportunity, when those rates were high now, that would be attractive to you. So you want to put your money in something like that. But when rates go lower, you start looking for other opportunities where you can make more money. Because if those interest rates are 10%, 11%, which is where they have been in the past couple of years, That's easy money. You just invest in a corporate bond and get a 10%, 11% without having to do anything and taking very little risk, and you get that easy return. But when those rates start falling and you're only getting 3%, 4%, that's not very attractive anymore. And so now you start looking for other opportunities to make more money. And what do the moneyed class do? They start looking to equities, to stocks, to the stock market. And that is why we had seen that stock market boom in Jamaica in, let's say, up to 2020, up to COVID. Up to COVID time, we had so between 2016 and 2020, we had some boom. Before 2016, 2014 up to 2020, we had a nice bull run in the market because interest rates were low, and so the moneyed class was looking for opportunities to grow their money, and they put it into the stock market. And so now that interest rates are coming back down, the expectation is that the stock market will start doing well again, and we're looking forward to a resurgence in Jamaican stocks in 2025, because the past couple of years have been terrible for Jamaican stocks.
I want to bring in the conversation the whole matter of exchange rates now, Kalilah. What effect will this policy rate decrease have on Jamaica's exchange rates, particularly as it relates to the U.S. dollar?
So the thing to consider when you're thinking about exchange rates is where is the U.S.'s inflation? Sorry, not inflation. Where is the United States interest rates? So the Federal Reserve recently reduced their interest rates as well. And Jamaica actually reduced interest rates before the Fed, because the Fed hadn't reduced rates in, I think, since COVID in 4 years. And so interest rates in the United States were high. Interest rates in Jamaica were high. There was a lot of pressure in Jamaica to reduce interest rates. But the BOJ had consistently said, well, we are waiting on a signal from the Fed because we don't want our interest rates to be too far misaligned with the United States interest rate. And why is that? Well, there's a thing called capital flight. If interest rates in the United States are a lot more attractive than interest rates in Jamaica, what the moneyed class do is they take their money from Jamaica, invest in U.S. dollars, so they have to convert it to U.S. dollars, and then invest in United States opportunities, which means that U.S. dollars are leaving the country, and that puts a strain on the exchange rate. And so that's one of the reasons why the BOJ, one of the factors BOJ has to consider in how quickly they bring down the interest rate or how quickly they move the interest rate. And it needs to be aligned. And so we are, I can't say aligned because the U.S. still has way lower interest rates than Jamaica. Traditionally they have.
Yes.
But moving in tandem with that helps to keep the currency a bit more stable.
I know it's early days yet, Kalilah, but this port workers strike and the possibility of scarcity in terms of goods and supplies and so on. Do you think this might also, as time progresses, if it's not abated, have an impact on inflation here in Jamaica?
Absolutely, because it's going to impact supply. And we know the forces of supply and demand are at play. When things scarce, when you can't get things, the cost goes up. And so it's something that we definitely have to pay attention to what is going on. We saw what happened during COVID when we had supply chain disruptions, the cargo coming from China, issues with the Panama Canal, nothing was getting here on time, delays for months. We saw the impact of that. That was one of the things that led to the high inflation that we've seen over the past couple of years. And so if we go through this again with the port workers strike, we're going to have another one on our hands. Inflation is going to go up.
Wow. For persons out there who are contemplating borrowing, you did say that although the BOJ has reduced their rate by a small margin, we might not see the commercial banking sector doing likewise in short order. But what should the consumers do, those who are interested in borrowing? Do you suggest that they shop around, negotiate harder? What position should they take?
Certainly, always shop around, always negotiate, always be aware of your strength as a borrower. So you want to know what your credit score is, what that credit report says about you. You are entitled to a free credit report once a year, every Jamaican adult. And so make sure you know how the borrower perceives you, how the lender perceives you. If you're in a strong position, you have good credit, then you have a better opportunity to demand better terms. Because you are an attractive client to them. They want your business. If you are not a good borrower, you're always paying back your loans late or you're missing payments regularly, then they don't want you as a client, and they're going to offer you, if they approve the loan at all, they're going to offer you higher interest rates, or you may be forced to go to non-traditional lenders like the micro lenders, the loan sharks, and you all know what those interest rates are like. So know what your position is, know how strong you are as a potential candidate for a loan, and that puts you in a good position to negotiate.
Do you anticipate any further reduction from the BOJ side?
Absolutely. We've been waiting on reductions for the past year. The entire 2024 has been the financial sector leaders calling on the BOJ to start reducing interest rates. It is finally happening. We're not gonna get back to 0.5% overnight, if ever, if at all. But we definitely would like to see further reductions so that it becomes easier to access capital, whether personal or commercial, and so that we can start seeing a revitalization in the stock market again.
Absolutely. I learned a lot this morning. I want to thank you, and I want to also commend you before you go, Kalilah, on the good work you've been doing with Money Media Limited. I follow you, and I learn a lot through that process. Do you care to mention any social media handles or anything like that?
Sure. Go to moneymissionja.com to learn more about money, to learn about how you can make your financial plan, reduce your debt within 12 months, make a plan to reduce your debt, learn about investing and wealth building strategies, moneymissionja.com.
All right. Thank you once again, and have a wonderful day.
You too. Bye.
All right. Bye-bye. Great talking with you. Kalilah Reynolds, ladies and gentlemen.